Yeah, I saw some research today that shows the Dow Jones index is about to post its worst month of April since the 1932 Great Depression. It seems like, though, the Aussie stock market here is faring better. Why do you think the ASX is performing better than the Dow?
The market here is a little bit more insulated. I mean, obviously, a lot of the effects of the policy annulments on the US are going to have a bigger impact on the US economy. It's going to create problems for US companies, whereas Australia, I mean, we have been hit with a 10% base tariff increase. Obviously, some industry-specific tariffs around steel and aluminium, potentially some around pharmaceuticals still to come. It's going to have an effect on Australia, but at an industry level, not at a national level when it comes to the growth outlook. And we have seen, again, those second-order effects, thinking around what it does to global growth, how China responds, potentially being somewhat of a tailwind for Australian markets as well. So if we do get a big fiscal stimulus package coming out of China that could be announced as early as this month, that's actually going to be supportive for the market here. In the meantime, you have seen valuations on Australian equities come down to a certain extent. And I think investors are still looking for defensive positioning in the Australian market if we look at the performance of some of the financial sector just today, and looking for that prospect of Chinese stimulus if we look at the materials and miners as well.
And just quickly, do you think the RBA could cut rates by 50 basis points next month?
I don't think they'll cut by 50 basis points. I think they will cut next month. There's always a risk that the central bankers, whether it's in Australia or the US, do one of these emergency rate cuts or an outsized rate cuts, and that can actually have a negative effect in terms of not creating that positive sentiment in terms of supporting the economy, but creating a bit more negative shock in terms of an unsurprised large cut that wasn't there really expected. They generally telegraph these things quite well. They want to dampen the market volatility around that move, and they really want to provide that guidance that says we're here to ease policy rates. We're going to do so gradually as the economy dictates it. We're not here to sort of scare the market with saying we need to do things faster or larger than we had anticipated just a couple of months ago.
Kerry Craig from JP Morgan Asset Management. Thanks for coming on the show.
Thanks, Ed.